Adcorp is South Africa's largest employment services company and operates in the permanent recruitment and flexible staffing sectors, as well as business process outsourcing. It was founded in 1975 and has a market cap of 2.1 billion rand. It has a price to earnings ratio of 13 and a dividend yield of 5%. This is the big one in the recruitment sector in South Africa. Paul, let's get your thoughts first.
Yeah, look, by big in this space, we're talking about a company with a 2.1 billion market cap. So not exactly enormous, but you know, they have been a plucky operation that has stuck around and has changed their core business as the market has shifted. So at some point they were much bigger in advertising, media placements, annual reports, that kind of thing. Then they got into the white collar staffing and recruitment environment. You know, and brands like the Oval Office and so on are all in their stable. Then about 4 or 5 years ago, they picked up on the blue collar working placement stuff. So companies like Murray and Roberts, you know, were doing projects and they realized rather than retaining the services of bricklayers, they could rather have them through capital outsourcing and basically source them as they saw fit, took away all of the HR problems. So, you know we operate in quite a restrictive labour environment with the CCMA there wanting to jump on your head as long as you take anybody out, etc., etc. So companies, big ones, have been very happy to go down this route. And so that business division within Adcorp is now the single largest profit contributor.
Seppo, let's have a look at the share price right now. Perhaps you can talk us through the share price graph.
It's been a volatile picture to say the least. I think if you pull this back to 2000, you'd have seen a strong rally. And as I said, the sector as a whole is really leveraged in terms of the economy. And as the economy was thriving, Adcorp outperformed the all share quite handsomely. It has struggled over the course of the last couple of years, as the chart shows, pulling back from the highs in 2008.
They're really going nowhere over the last 3 years.
Yeah.
Can I use that terminology? Going nowhere.
Going nowhere over the last couple of years. Actually, no, to be fair, it depends where you bought. You could have picked this up in 2009 and you actually would have been rewarded quite handsomely too.
True, that is true. Yeah. So since its rise in 2009, it's gone nowhere. Perhaps a correction on that front.
Yeah, but look, to be fair to them, the profits have not gone nowhere. The profits have been steadily increasing. I think the fact that it's gone sideways like that's a function of the uncertainty around the labour broking issue. And let's just put our finger right on that thing. COSATU, which is a core part of the leading alliance in this country politically, is dead set against this. Everything that they say, they just want to get to a situation where the big corporates have to employ everybody, from the tea lady right through to the call center operator, right through to the chief executive. They're not interested in this because they know that the labor brokers offer less benefits, and the companies, it's far better for the worker to be employed by the company because then you get the medical aid and you get all the other stuff that comes with being a permanent employee. So cost-wise, there's a big issue. So the unions have drawn a firm line on this thing and they say they're not backing down. Last night, Zwelinzia Mavavi, the head of COSATU, was tweeting to say that they cannot get the ANC to agree to drop this thing, but that they're now going to take the fight to Parliament. So I think what you can tell from that is that this is a high-stakes battle, and at this point, nobody is clearly winning.
But when we do have a winner, it's going to have a huge impact one way or another on the industry.
Yeah. Look, I think in the interim, what looks like the compromise is that it's going to be more regulated. And I think that, in a perverse way, is actually going to be positive for the bigger players, and Adcorp is the biggest player in the industry. The more regulation you have, the more the smaller guys are going to drop out, and actually it could end up being the best thing that could happen to Adcorp.
So are you backing the stock on the back of that story?
Not necessarily just on the back of that story. I think if you extend this historically, I think it's a risk, and it has a material effect on the outcome of the business going forward. But if you look at what they've done, given the current framework, this is a top-notch company.
Look, one of the solutions that's come forward from government is to say, okay, we'll reduce the time that you're allowed to be employed by a labour broker before you're deemed to be a full-time employee. So if you've been in the call centre at Standard Bank for more than 6 months, boom, then you're on Standard Bank's payroll. The problem, of course, is all that will do is result in a lot of 5 months and 31-day contracts, after which people are gone and replaced by someone else. So it's difficult because I don't think that's going to make the unions happy at all. So I must say, for me, whilst I can see this is good business and this is a global, not a South African trend, I fear that this uncertainty is going to stick around for a long time.
Tsepo, hot or not on Adcorp?
I'd say Adcorp is hot. Signed valuations, top-notch management.
Paul, hot or not on Adcorp?
I agree. I like Richard Pike a lot. I like Anthony Sher, the management team there. I love Loan Sharp. I think Loan Sharp, I mean, what a great guy. His contribution to the discussions, blah, blah, blah. But in the end of the day, unfortunately, because of this thing with the labour broking and the political resistance to it, I'm afraid I'm going to have to go not hot with this one.